Hello and welcome to ET Now. You're watching IPO Central, and my guest today is from Glottis Limited. It's a logistics company, an end-to-end logistics company with major revenues coming from ocean freight. Its IPO is opening on September 29th, closes on October 1st, price between 120 to 129. A fresh issue of 160 crores and OFS of 147 crores. So a total of nearly 307 crores fundraised through an IPO, which is happening. And joining me is Mr. Ramkumar Sentivel and Mr. Kuttapan Manikandan, who both are promoters and MD of the company. To begin with, Mr. Sentivel, can you take us through your business model and the operations that you have?
Thanks for having us with you today. Glottis, this is a company which formed in 2004. It's a 21 years old company. And both promoters like Manikandan Kuttapan and Ramkumar Sentivel, and we have the company is based out of Chennai, headquartered in Chennai, and we have branches in 8 different locations in India, in major ports as well as the ICD locations in India. So Glottis is predominantly a freight forwarding company, a logistics service provider company, which is like freight forwarding activity, transportation, customs clearance, warehousing, and distribution. This is the core activity about Glottis, and Glottis is predominantly handling ocean products, which is like spread across different sectors. Renewable is one of our key sectors, and we have other sectors to like add on, like automobile and engineering and a lot other sectors, minerals.
Mr. Manikandan, you are raising 160 crores in fresh issue. What is the use of this proceeds?
So, objective of the IPO, if you check that, you can see that transportation is a purchase of containers. Like we are planning to purchase the containers and purchase of trailers, both 20 and 40 foot, is the main objective of this IPO proceeds, sir.
Can you take us through what is the current strength of your assets at this point in time, and what is the model there? Are you shifting from an asset light model to an asset heavy model?
Yeah, I'll just go through. So right now we have been holding only 17 trailers of both 20 and 40 foots. When you look at the strength, the total number of volumes we have handled in the last financial year, it comes to like lakh and 12,000 TEUs of TEUs in the terms, it's a boxes. So total number in the total capacity wise, we handle very few portion of the for our existing customers. When the strength of the fleet goes up, as well as the number of containers purchased increases, we can backward integrated the whole thing into our existing setup, which could add up to the volume strength growth as well as the revenue growth going forward.
What has been the volume growth in the last few years for you, and when you bring in these assets of your own, by how much, what could be the impact on the volumes going forward?
Volumes, if you could say in FY24, we have been doing volumes close to like 59,000 odd boxes, and in FY25 the volumes have it was FY23. FY24 it is like 90 odd thousand containers, and FY25 it crossed around lakh and 12,000 containers, which is like 18% growth, 18 to 19% growth. So when we do this backward integration with the transportation and customs clearance activity, we could scale up in furthermore volume drive in the future, as well as we can give reliable service to our existing partners and existing customers.
Sir, if you look at the freight rates in the last 2 to 3 years, they have been they have been volatile in that sense. It went up after the Russia-Ukraine war, and then it's then tapered down, and again it is on the verge up. How's your services or the fees that you get for the freight forwarding and other services that you provide for logistics dependent on the freight rates? Is it linked to that, or these are fixed fees and you have an annual increase in these fees?
Sir, if you look at the volume wise, year on year increase is there already. The freight rate, irrespective of the freight rate increase or decrease, the volume standard growth is already there. You can see also the revenue growth as well as the PAT growth is consistent here. So I think the freight rate going up or down going to affect anyway in this and also looking forward looking, you can look at our investment gets into trailers and containers. This will definitely going to reduce the overall cost to the final customers.
How will it bring in some benefit for you as a company?
So, as you rightly said in your earlier this thing, the freight fluctuations are there, but we have different kind of category customers. Like we have long-term customers where we give them a fixed cost, and a part will be kind of a fluctuating freight rate, which we do spot basis customers, mid-term customers. And but this is how we balance this freight, and we are very positive on keeping this top line and our growth level for the upcoming years.
Is like spread across to multiple layers here, sir.
Give me a sense of your trade receivables, because your trade receivables have also gone up in the last 2 to 3 years. You know, if I look at a fiscal 25, you had a trade receivables of nearly 106 crores there compared to a 54 crores. So your trade receivables have also jumped from a trade receivable days. It's almost now 41 days or so, which is there. Why is that trade receivables are going up?
So one thing is you could have see the revenue growth over the period. Like last year it was like 491 crores, and this year you can see that revenue growth of like 941 crores. So number of customers comes in also much higher. The new customer keeps adding to us to the benefit of the company. So such a way, so the revenue growth is like contributing to the total overall revenue, as well as you can based on that you can see that the outstanding time period also just jumps up slightly higher side.
Also to add here, the working capital cycle, which we are currently doing like 30 to 40 days, it is very positive compared with the market.
Very lower when compared to the market peers.
And do you plan to bring down these working capital days or trade receivable days in the coming future?
We are definitely trying to bring down, and so that is how we are trying to strategize our new customer base. So we'll be trying to balance it between the spot customers as well as the long-term customers. So this could positively bring down the working capital cycle going forward.
Can you also give us a sense of the kind of industries that you service to? Because in the last 6 months, we have seen a lot of, shipments or freights moving out of India to the US before the tariff rate came into effect, especially till August, if to be precise. Have you seen a higher volume in that period from between April to August, where you've seen your clients shipping in bulk or front loading their entire shipments before the August deadline?
Yes, as you said, rightly said, yes, there is kind of a rush, especially before this tariff. There is kind of a rush in doing this exports out of India. And in terms of volume growth, predominantly we do a lot of intra-Asia. So a small portion goes into West. So basically it is intra-Asia, and the volumes are very stable and very promising in this year. And government's policy is also helping us to drive this volume because a lot of capex is getting moved into India and raw materials are getting moved into India. So this is giving us a lot of opportunities in upcoming years together.
Can you give us a sense of what is the kind of freight volumes that you send across or receive from the US?
It's very marginal, sir. Right now, we are, if you look at that, our strength is lies in the Asian region. We are predominantly an Asian player, I would say. So, like close to like 80% of the volume is driven for us from the Asian side. So we are looking west going forward actually. So we are doing a lot of shipments to west as well. But comparative to west to Asian region, Asian is much higher in terms of volume. So it doesn't affect us much in terms of whatever the tariff right now is happening in the US.
From an industry point of view, you have a higher exposure to the renewable energy segment. Can you give us an indication of what kind of services that you provide to this segment? Because roughly, if I am not wrong, 47% of your revenues come from there. So, what services are you providing to the industry which is into renewable energy?
So renewable energy, we started in the year 2017 when this renewable boom started into India, coming into India, and we foresee and we were early entrant player into this renewable category. So we thought like that is big opportunity coming forward in this renewable industry, and Government of India's initiative also to make it green within 2030, and the initiation of like installation of like 300 gigawatt of renewables in India within 2030 gives us a lot of confidence and hope in this logistics industry, especially in this particular sector. So this is where we thought like we will drive more into this renewable industry. And as you said, like we are targeting renewables. It is in both ways. It is like spares of wind, and we do renewable like solar modules, and we also do a lot of raw materials to help catering this manufacturers of solar module in India. So going forward, this renewable for the next 4 to 5 years could be very promising for us.
Mr. Manikandan, if you can give us or throw some light on the top 5 customers for you. Top 5 accounts for nearly 42% of your revenues. So, if you can give us an idea of what kind of the profile of the customers that you have.
So top 5 is like, yeah, top 5 comes from the top. Its revenue comes number 1. Then come agro is there. Minerals and granite comes a third. Pharma we do customers like FMCG cargos. We do a lot of like reefer cargos, automobiles we do, engineering we do.
Also, you know,
I would add, sir,
yeah, please.
like as you earlier said, like 44% to 47% drives from energy vertical, and we have balance 54 odd % coming from very strong sectors like timber, agro, electronics, white goods, fashion and design, and rubbers. So chemicals. So these are other sectors where we will also try to spread across, and we will focus more in the upcoming years.
You know, your margin for FY25 was around 8.3%. Are these nominal margins for your sector, or you have enough scope to take them up, given that now if you're going for backward integration of trailers and others by acquiring them and having your own asset, will that margins, can that margins be pushed higher?
Yes, sir. We are very positive on that. So when we do this backward integration, the EBITDA and PAT margin will increase to a good portion. And compared with this listed and unlisted peers like in our industry, we are ahead, especially on the PAT margin and EBITDA margin.
Mr. Manikandan, if you can give us a sense of the kind of repeat customer base that you have in this industry for you, how you know, what is the kind of repeat customer and how long is that agreement? Do you have a long-term service agreement with these customers?
We do like see total number of customer it comes to like close to 1,900 or something like that. We have been handling approximately, and the regular customer should be like 1,300, 1,400 something in that range. So these customers keep on coming to us, back to us. It's like based on the service we have been offering to this customer. When you go to the past, what the service level, the number of top customers we have been handling, these are the repeated customers. The renewable is a prime, is a niche industry, I would say. The service we have offered to this customer keeps us, helps us bring back them to us and to supply their needs. So that is a great example to tell you in this period actually.
Mr. Senthiville, final question to you. You are primarily working out of the eastern coastal ports, basically. Are you available in all ports, east and west, from an operations point of view, or there is a plan to increase some operations in other ports as well?
So, as such, we are spread across all India. If I could precisely say, 40% of volume goes into west region, Mundra and Mumbai in the other corridor, and 40% could be in south like Chennai and Tuticorin, and 20% is spread across like Kolkata and other regions, Cochin and other ports. So we are equally positioned, especially on the volume spread within India. And going forward, we are very bullish to infuse more sales activities, especially in west and north of India.
Mr. Sentivel and Mr. Manikandan, thank you very much for joining us today on ET Now. Your IPO is opening on 29th of September, closes on October 1st. 120 to 129 is the price band. It's a fresh issue of 160 crores and OFS of 147 crores. So the total size is 307 crores and the company is valued at close to 1200 crores at the upper end of the price band. Thank you very much for joining us today on ET Now.
Thank you so
sir.
much for having us. Sir. Thank you very much.
Thanks for interviewing us today. Thank you, sir.